How did Dubai become rich without income tax? Billions in earnings, hidden fees, and the real truth of the millionaire model. Imagine this. A city where people from all over the world come to earn money. Luxury cars are commonly seen on the roads. Skyscrapers seem to cut through the sky. And in almost every second social media video, you hear the same claim. Dubai is tax-free. At first glance, it feels like a dream city. But that's where the fear begins. Because when a place starts selling more on shine than on truth, there are often layers behind it that people don't want to see. And the curiosity is this. If Dubai is truly, completely tax-free, then where does its government get money from? How does it run such a massive infrastructure machine? And is this millionaire model actually true or only half true? Dubai's image has been very carefully built. To the world, this city sells a combination of opportunity, speed, luxury, comfort, and a tax-friendly life. That's why countless entrepreneurs, professionals, consultants, influencers, traders, and investors see Dubai as a kind of financial escape route. They think that since there is no tax on salary here, money will directly stay in the pocket and wealth will grow quickly. But the real story is far more layered than this. There is no personal income tax in Dubai, and that is true. The UAE government's official taxation platform clearly states that individuals are not charged income tax. But the same official system also mentions that 5% VAT is applied, and a corporate tax regime exists for businesses. That means no personal income tax and completely tax-free are two different things. This is the first illusion that needs to be understood. Dubai's success story is not of a tax-free paradise, but of a tax-light but fee-heavy model. In simple terms, the government does not cut personal income tax from your salary slip, but to run the system, it extracts money from other entry points of the economy. And that is its smart model. You earn, do business, invest, travel, buy property, get permits made, register a company, renew visas, use utilities, pass through airports. At every stage, the state's revenue logic quietly remains active. That is why Dubai's model looks tax-free on the surface, but internally, it runs on structured monetization. Now the question is, where does the money actually come from? The first major answer is service fees and administrative charges. The UAE's official visa platform itself mentions things like visa fees, overstay fines, and status change costs. In an expat-driven city like Dubai, residency permits, work authorizations, medical checks, Emirates ID-linked procedures, visa renewals, and the licensing ecosystem become a major revenue stream. When millions of expats live and work in a city-state style system, their everyday legal existence itself creates an administrative economy. This is not a hidden secret, but a core part of the Gulf governance model. The second major source is the business setup and licensing ecosystem. Dubai made itself a global business hub, created free zones, made company incorporation easy, attracted global founders. But none of this is free. Issuing trade licenses, renewing them, taking activity approvals, office registration, permit compliance, and commercial paperwork. All of it operates on a paid framework. On Dubai government's business setup platform, the central role of trade license services and company access frameworks is clearly visible. That means people who say Dubai is businessman-friendly are right, but this friendliness is not free. It is monetized. The government has shifted tax collection not from salary, but towards commercial activity gateways. The third layer is consumption-based taxation. People often consider only income tax as tax, while indirect taxes silently have a bigger impact. In the UAE, 5% VAT is applied on goods and services. Both the Federal Tax Authority and UAE government platforms clearly state that VAT is a transaction-based tax applied at every stage of the supply chain, and the final burden comes on the end consumer. That means whether it is a restaurant bill, shopping, various services, or business procurement, revenue comes from the consumption economy anyway. So, the absence of salary tax does not mean the state leaves you untouched. It takes its share not from your earning, but from your spending and transactions. Then comes corporate tax, which has further weakened the Dubai is completely tax-free narrative. According to the UAE Ministry of Finance's official guidance, taxable business income up to AED 375,000 is taxed at 0%, and above that, a 9% corporate tax applies. This means small startups get threshold protection, but profitable businesses fall under formal taxation. In Emirates Group's 2025 annual reporting, it is clearly mentioned that this was the first financial year when UAE corporate tax was applied, and after a 9% tax charge, post-tax profit was reported separately. The symbolic meaning of this is huge. When Dubai's flagship aviation group itself is mentioning corporate tax, it clearly signals that calling the city no tax is factually incorrect. Yes, it is also true that Dubai's tax burden philosophy is still lighter than many Western economies. There is no direct tax on salary. The environment supports capital accumulation, and many business structures are still competitive. But this is true only in comparison, not in absolute terms. Because the ground reality is that even without personal income tax, there is VAT, corporate tax, sector-specific taxes, fees, charges, and ecosystem-driven monetization. So those who assume from social media clips that Dubai has zero tax are only seeing half the picture. Some sectors carry an even different burden. Public summaries mention separate tax treatment or higher fiscal burden for foreign banks, oil companies, and specific regulated sectors. The UAE government taxation page broadly also indicates that even without individual income tax, sector-specific fiscal tools exist in the economy. In reality, Gulf states' taxation architecture has historically been built on a mix of oil income, state-owned enterprise income, concession structures, indirect taxes, and licensing systems. Dubai has combined this with a modern services economy. Now coming to the core question. If there is no personal income tax, how did Dubai become rich? One big answer is diversification. Chubb, instead of relying on oil, Dubai built trade, logistics, aviation, real estate, tourism, finance, retail, and services as its growth engines. According to Digital Dubai's January 2026 release, Dubai's GDP for the first 9 months of 2025 was 855 billion, with growth recorded at 4.7%. In the same data, wholesale and retail trade contributed 26%, financial and insurance activities 12%, real estate 8%, and construction 7%. This means Dubai does not earn only from oil wells, but from moving economy. Where goods are sold, people travel, property changes hands, finance flows, and services are continuously chargeable. That is why calling Dubai's economy simply oil-rich is incomplete. That narrative fits the imagination of the 1990s, but today's reality is diversified commerce. Dubai has transformed itself into a port city, logistics hub, aviation connector, luxury destination, shopping capital, and business headquarters city. This means revenue does not depend on a single source. Look at import-export activity, airport traffic, hotel economy, license economy, real estate transactions. Everywhere there are government-linked income channels. That is what makes this model resilient. Tourism is its most visible pillar. According to Dubai Department of Economy and Tourism's published data, 10 million overnight visitors came in the first 6 months of 2025, and 14 million international visitors were recorded in the first 9 months. In February 2026, Dubai airports also reported that DXB handled a record 95 million passengers in 2025, the highest annual international passenger traffic for any airport in the world. Think about it. When so many people come to a city, stay, fly, shop, eat, travel, and transit, their spending automatically becomes a revenue machine. Hotels, dining, entertainment, shopping, transport, tourism activities, airport-linked businesses all contribute to state-linked income in some way. Airport revenue is a great example of this. Dubai Airport's published schedule of charges lists AED 75 passenger service charge, AED 5 passenger security and safety fee, AED 5 advanced passenger information fee, and AED 40 passenger facility charge on departing passengers. Technically, some of these are collected through operators or ticket structures, but in economic terms, this is aviation ecosystem monetization. That means an airport is not just a place for planes to land and take off. It is a revenue-generating platform. And when DXB alone reaches 95 million passengers, the scale of every passenger-linked charge is easy to imagine. Not only that, Dubai's aviation ecosystem also creates direct value through government-owned companies. According to Emirates Group's 2025 release, the group recorded AED 145 billion in revenue and AED 23 billion in pre-tax profit. The same release stated that the group declared a dividend of AED 6 billion to its owner, the Investment Corporation of Dubai. The Investment Corporation of Dubai is itself the principal investment arm of the government of Dubai. This clearly means Dubai does not earn only from taxes and fees. It also earns from profits and dividends of state-owned commercial giants. The government here is not just a regulator, but also an investor. This is where the real twist of the Dubai model appears. In many countries, governments raise money by taxing the private economy. In Dubai, the government took a parallel path, giving some level of low tax incentive to the private sector, while maintaining strong control over strategic assets, aviation, utilities, land, infrastructure platforms, sovereign investments, and service gateways. This gives it two advantages. First, the city becomes attractive for global capital. Second, the state itself becomes a participant in commercial success. That is why Emirates, airport infrastructure, real estate-linked public frameworks, utility systems, and government-backed corporate arms are so important in this model. Now let's talk about fines, because this part often appears in popular narratives. It is true that rule enforcement in Dubai is strict and violations can be expensive. The UAE's official platform mentions visa fines and overstay penalties. Traffic rules, municipal compliance, and public order enforcement also act as supplementary revenue sources. But an important distinction is necessary here. Dubai's wealth was not built on fines. Fines are part of its discipline architecture. The real money comes from services, licensing, consumption, aviation, state enterprises, tourism, and investment-driven ecosystems. Fines support the system. They do not drive the economy. Now let's return to that popular phrase, Dubai Millionaire model. What does it really mean? Does everyone become a millionaire there? Absolutely not. Dubai offers opportunity, not a guarantee. The absence of personal income tax can be a powerful advantage for high earners.
especially those working with strong salaries, consulting income, global business flows, or asset-light service models. But in the same city, high rent, premium schooling, health insurance costs, visa and renewal expenses, office fees, licensing outflows, lifestyle inflation, and consumption-driven spending are also very high. That means those who earn well have an opportunity to build wealth, but those who move there just chasing the shine may see their expenses rise just as fast. This city knows how to make you spend as much as it knows how to help you save. That is why Dubai's millionaire model is not just a no tax story, but a story of high income, high velocity economy, monetized services, and controlled state capitalism. Those who are disciplined, have strong income, and understand the city's fee structure can build wealth. But those who assume that life will automatically become easy just because there is no tax quickly realize that the system is paid at every turn. Only its language is different. So next time someone says there is no tax in Dubai, understand that they are telling only half the truth. The real truth is that Dubai has changed the method of tax collection. There is no direct hit on salary, but at every gate of the system, an economic meter is running. And perhaps that is its biggest business intelligence, making people feel that they are tax free while the city quietly keeps filling its treasury through every movement, every permit, every flight, every stay, every license, and every
If our
transaction.
video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestion. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources news from various news agencies, opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.